US stocks swung lower on Friday after the release of strong jobs data. Let's go to Pete Switzer, founder of the Switzer Report. Pete, good morning to you. New week's ahead, but US stock players seem nonplussed about the jobs data. How come?
Well, they expected 258,000 jobs, Pete. 528,000 showed up. Now, that's really good news in terms of the economy, but this was an economy that allegedly was in a technical recession. Now, people like Janet Yellen, who's the US Treasury Secretary, said this is not a real recession, and I think these job numbers prove that. But even that's good on one hand. On the other hand, it means that the hopes that the Fed might slow up its interest rate rise became less believable, and you would kind of expect that could undermine this fantastic rally. We've seen the NASDAQ up 18% since the middle of June, Pete. I think the S&P 500 is up about 13%. So there's been a great rally, and a lot of it's been driven by the fact that they thought interest rate rises were either going to dissipate to become small or even be paused. That great number puts a big question mark over that. It shines the spotlight on a very important piece of data later this week.
Okay, huge number. July CPI, it's out Wednesday. How important is it for that nice rally in stocks since mid-June, Pete?
Yeah, very, very important because, see, the last number they got in June was 9.1%. Now, Joe Biden came out instantly and said, hang on, this is old news. We're now in July. This is going to be a much better month for inflation because gasoline prices are falling, oil prices have fallen, and all this sort of thing. So there's a high expectation that the July number, which is now being reported in August, will be a sign that US inflation is coming down. Now, if the number's good, remember the last number was 9.1%. If it's an 8 or a 7% number, the market will really love it, and that will help the rally. But by the way, if it's a big number, close to 9, they'll say, hang on, inflation is not being beaten. The Fed's going to have to keep tightening, and that's not going to be good for stocks. So I think by Thursday, our time, the Yanks get it on Wednesday. On Thursday morning, that's when we'll know what's going to happen to stocks.
Okay, travel booming, Pete, but it's not great news for our fourth biggest export industry because more are leaving Oz than coming in.
Yeah, the numbers work out this way. In May, 231,480 people came in, short-term tourists, but 420,110 Aussies left the place, despite the fact that airfares are unbelievably expensive. There's hardly any seats. People are desperate to get out of the place. And so it's really important that, Australia actually re-establish itself. Remember, tourism is our was before the pandemic, our fourth most important export industry, employs 660,000 people and about 8.1% of our total exports. So it's a really important industry, but at the moment, more people are leaving than are coming in. And of course, we've got the problems with China. China used to supply 1.4 million tourists a year. I don't reckon the numbers are anywhere near that at the moment, particularly the battles of Beijing.
Yeah, it'll take a while to get to that level again, that's for sure. Peter Switzer, thank you. Have yourself a good week.